What if I told you the same man who once called crypto a scam just made a statement that could send Bitcoin into its next explosive phase? Not next year, not someday, but potentially starting right now. Because when someone like Trump says crypto is now mainstream, that's not just a comment, that's a signal. And historically, signals like this come right before massive market moves. So the real question is, are we about to witness Bitcoin's next all-time high while most people are still distracted? And right now, as we sit here in April of 2026, the US government is holding over 328,000 Bitcoin worth roughly $25 billion. That's not a hedge fund, that's a nation. So here is the question that nobody around you is asking. When the most powerful government on earth starts stockpiling an asset, what does that tell you about where that asset is going? Stay with me until the 14-minute mark, because what I'm about to walk you through isn't just about price. It's about a structural shift in the global financial system that is happening right now, quietly, while most people are distracted. Quick note before we go further. This is not financial advice. Everything here is for educational and informational purposes only. Always do your own research and consult a qualified financial advisor before making any investment decisions. Let me set the stage. Bitcoin is currently sitting around $77,000 to $78,000 as of this week in April 2026. It hit its all-time high back in October of 2025. Then came the pullback, tariff shocks, geopolitical tension in the Strait of Hormuz, rate fears, and Bitcoin dropped hard. By the end of 2025, it was trading roughly 30% below that record. People panicked. The headlines said the rally was over. Crypto is dead again. Sound familiar? Here's the thing. That narrative has been written before, multiple times, and every single time it appeared, it preceded one of the most powerful recoveries in financial history. But this time is different from every other cycle, and I don't say that lightly, because this time something has changed at the structural level, something that can't be undone with a policy reversal, a rate hike, or a single bad headline. The US government has declared Bitcoin a strategic reserve asset. Morning, afternoon, or night for you right now. Drop it in the comments. I'm genuinely curious where in the world people are watching this. Let me explain why that single fact changes everything you think you know about Bitcoin's next move. Let's go back. In 2019, Donald Trump posted this on Twitter. I'm not a fan of Bitcoin and other cryptocurrencies, which are not money and based on thin air. Bitcoin dropped 7% within 45 minutes. That's how much power one statement had. In 2021, he called it a disaster waiting to happen. The same man. Now here's what actually happened between then and now. In the summer of 2024, Trump stood on a stage at the Bitcoin conference in Nashville, and he made a promise. He would fire SEC Chairman Gary Gensler. He did that in January 2025, day one. He would make America the crypto capital of the world. He signed an executive order for it, also in January 2025. He would create a strategic Bitcoin reserve. Done, March 2025. Now the US government sits on 328,000 Bitcoin and has a policy in place to never sell it. Think about that for a second. The largest economy in the world has officially joined the buy side of Bitcoin. And here's where the history lesson becomes relevant. Every major Bitcoin cycle followed the same progression. In 2017, people laughed at $1,000 per coin. In 2020, institutions quietly entered between 10 and 30,000. In 2021, retail flooded in between 50 and 68,000 at the peak. The pattern was always the same. Smart money moves first, narrative shifts second, retail chases third. Now ask yourself, with governments accumulating, with corporations buying by the billions, with regulatory frameworks locking in, where exactly are we in that cycle right now? If this is starting to make sense, because we're just getting started, here's something most people completely glossed over. Strategy. The company formerly known as MicroStrategy just made its largest Bitcoin purchase since 2024. 34,164 Bitcoin, $2.54 billion in a single transaction. That brings their total holdings to 815,061 Bitcoin. That's not a bet, that's a conviction, and it's not happening in isolation. Global crypto funds pulled in $1.4 billion in net inflows in just the last week of April 2026 alone, the strongest week since mid-January. $1.12 billion of that went directly into Bitcoin. This is smart money, and smart money doesn't move like this unless it sees something coming. Now here's the uncomfortable part. Most people watching this right now are not positioned. They're watching. They're waiting for confirmation. They're looking for the moment it becomes obvious. And here's the brutal truth about markets. By the time it's obvious, it's already expensive. This is not an opinion. This is a documented behavioral pattern called FOMO, and it has cost more retail investors more money than any bear market ever has. Think about the people who waited for Bitcoin to confirm in 2020. It confirmed at 20,000, then 30,000, then 68,000. Each confirmation made the entry worse. Each wait made the pain bigger. Right now, Bitcoin is up over 13% in April 2026 alone, on pace for its strongest monthly performance in an entire year. That recovery is already happening. The question isn't whether it started. The question is how much of it you've already missed. And more importantly, how much more there is to come. What would you do if this actually plays out the way the data suggests? Comment below. I read every single one. Now here's where things start to break down in a way that should make you deeply uncomfortable. Because this isn't just a Bitcoin story. This is a story about power, about which assets governments decide deserve to survive, and which ones they decide to let die. For most of Bitcoin's life, the government was the enemy. Regulators hunted exchanges. The SEC filed lawsuits against every major crypto firm. The narrative was, we will regulate this into irrelevance. And then something shifted. Not because the government had a change of heart, but because they ran the numbers. When Bitcoin crossed $1 trillion in market cap, when Bitcoin ETFs launched and pulled in tens of billions in their first year, when 70 million Americans were estimated to hold some form of crypto, the political calculus changed overnight. You can't demonize an asset that half your voter base owns, and so instead of fighting it, they absorbed it. Trump signed the Genius Act in July 2025, a stablecoin regulation bill that didn't kill crypto. It invited banks to issue their own stablecoins. He appointed Paul Atkins to run the SEC, a pro-crypto regulator. He disbanded the National Cryptocurrency Enforcement Team in April 2025. He brought the CEOs of Coinbase, Kraken, MicroStrategy, Robinhood, and others to the White House for a crypto summit. And here's what that all means, stripped down to its core. The regulatory moat that was supposed to kill crypto is being filled in. And this is exactly why this matters right now. Because when the regulatory risk disappears from an asset, the institutional money that was waiting on the sidelines has no more reason to wait. Think about every pension fund, sovereign wealth fund, and insurance company that couldn't touch crypto because of compliance risk. That barrier is shrinking fast. The crypto super PAC Fair Shake has already spent $271 million on the 2026 midterm elections, specifically to protect crypto-friendly legislators. That's not activism, that's infrastructure. They're building this political architecture to make crypto untouchable for the next decade. And if you're not thinking about what happens when that infrastructure is complete, you should start. Are you positioned or just watching? Subscribe if you want to stay ahead of what's coming, because this story is moving faster than most people realize. Here's a number that doesn't get enough attention. Bitcoin has a hard cap of 21 million coins. That's it, forever. No central bank can print more. No government can issue more. There will never be more than 21 million Bitcoin. Now look at who's holding it. The US government alone holds over 328,000 Bitcoin and has pledged not to sell. Strategy holds over 815,000 and keeps buying. ETF providers hold hundreds of thousands more on behalf of retail investors. Long-term holders, people who have never sold through multiple cycles, sit on millions more. What happens when demand rises and the available supply keeps shrinking? You already know the answer. And here's what makes it more interesting. The Tether stablecoin supply, which is essentially dry powder sitting on the sidelines waiting to buy crypto, has grown to nearly $150 billion. That is a wall of liquidity pointed directly at the market. When sentiment turns, that money doesn't trickle in, it floods. What happens next is the real story. Let's get specific, because narratives are interesting, but catalysts are what actually move markets. Here are the three things that could accelerate Bitcoin's next major leg. First, congressional codification of the strategic reserve. Right now, Trump's Bitcoin reserve exists as an executive order. That means the next president could reverse it on day one with a signature. The market knows this. It's priced in as political risk, but there's a window coming. The National Defense Authorization Act, the annual defense spending bill that almost always passes, is being discussed for late 2026. If the strategic Bitcoin reserve language makes it into the NDAA, 328,000 Bitcoin becomes a permanent national asset backed by statute. The political risk disappears, and the market reprices accordingly. That event alone could be one of the most significant catalysts in Bitcoin's entire history. Second, institutional allocation acceleration. Right now, Bitcoin represents a fraction of 1% of most institutional portfolios, but the infrastructure is being built. ETFs are approved, custody solutions are in place, compliance frameworks are being written. The conversation inside major asset management firms has shifted from should we allow this to how much should we allocate. Even a shift from 0.5% to 2% allocation across global institutional assets represents hundreds of billions of dollars of new demand into an asset with a fixed supply. Simple math. Third, the geopolitical hedge narrative. Here's something that almost nobody is talking about in the West: Japan. Japanese institutional investors are quietly increasing Bitcoin exposure. Why? Because the yen has been weakening for years, because Japanese government debt is at historic levels, because Bitcoin, for an investor sitting in Tokyo watching their currency lose value, looks a lot like a lifeboat. This is happening in other parts of the world too. Nations with currency instability, nations with capital controls, nations watching the dollar's global dominance get questioned. Bitcoin doesn't care about borders. It doesn't care about central bank policies. It doesn't need a correspondent bank to move across the world. And that feature, the one Satoshi Nakamoto coded in at the very beginning, is becoming more relevant, not less. Share this with someone who needs to see it before it's too late, because this context matters and it's almost never discussed in mainstream financial media. So let's come back to where we started. The man who called Bitcoin a scam, who said it was based on thin air, who watched it, dismissed it, feared it, is now the man whose government holds more Bitcoin than any other nation on earth. And before you decide that's just politics, before you dismiss it as hype, ask yourself one question. Why would the most powerful government in the world commit to holding an asset it believed was worthless? They wouldn't. No government stockpiles thin air. No government establishes national reserves in assets they don't believe will hold value. And here's the part that should give you pause. They're not just holding it, they're building the legal infrastructure to protect it permanently, as I mentioned in my last video. They're appointing regulators who support it. They're passing laws that integrate it into the banking system. They're allowing banks to issue stablecoins on the same rails. This is not adoption. This is absorption. Bitcoin is no longer outside the system trying to get in. The system came to Bitcoin. And when power adapts to an asset instead of fighting it, that asset doesn't stay at $77,000. Now, I want to be direct with you. This is not a guarantee. Bitcoin is still volatile. Macro conditions can shift. Geopolitical events can create short-term chaos, as we've seen this very month with the Iran situation and the Strait of Hormuz tensions. Risk is real. It always was. But the structural picture has never looked like this before. Not in 2017, not in 2020, not in 2021. This is the first cycle where sovereign governments are holders, where Bitcoin has a market cap larger than $1.3 trillion, where regulated ETFs exist in the world's largest capital markets, where a sitting president of the United States calls it a strategic national asset. If you're still on the sidelines asking whether this is real, the question you actually need to answer is, at what point does the evidence become convincing enough for you to act? Because by the time everyone agrees, the price will already reflect the consensus. Do you think the system as we knew it can hold? Drop your thoughts below. This is genuinely one of the most important financial conversations of our time. Let's close the loop. We started with a man who called Bitcoin a scam. We ended with that same man establishing a national strategic reserve in it. That is not just irony. That is the entire story of Bitcoin compressed into one arc. Every major institution, every major government, every major bank that dismissed Bitcoin eventually had to reckon with the fact that it didn't disappear. It didn't die. It just waited. And now, in April 2026, with Bitcoin recovering above 77,000 after a painful correction, with over $1 billion a week flowing into crypto funds, with strategy buying billions more, with the US government holding its position and building legislation to make it permanent, the conditions that have preceded every major Bitcoin breakout in history are converging. Political legitimization, institutional infrastructure, supply tightening, liquidity building. The question for you is not whether this is real. The question is whether you will be early, or whether you will be the person who watches it happen and explains later why you didn't move when you had the chance. This channel exists for one reason: to help you think differently before the crowd catches up. If this breakdown gave you a new perspective, subscribe to the Wealth Continuum, not because you'll get rich from a YouTube channel, but because the most expensive thing in investing is being the last one to understand what's already happening. Stay sharp, stay early, and stay on the right side of what's coming.